Welcome back, everyone. So in today's video, I'm going to be going over chart patterns. Now, the thing about chart patterns is it's extremely retail, so to speak. So the biggest thing about chart patterns is that it's not about the actual pattern, right? It's not about any of, oh, it has to do this. It's not about that. It's not about that. What it's about is you have to look under the hood and see, okay, why would this happen? Right? Why would we come down, reject, come down again, and then look to go up? Why does that actually happen? Right? And you really aren't going to actually be looking for these kind of chart patterns. You'll just realize that, you'll just look at the chart and just see, oh yeah, right here, oh yeah, double top might form, but it's not, you're not really going to be saying double top. It'll just be, oh yeah, sellers are getting really strong around this level. I'm going to look to go short. And then you just, pick an entry off here, but that's because liquidity was just grabbed up there and stop losses just got hunted. So, it's not about these actual chart patterns. And that's just something that I need you guys to realize before, we go over this, because, a lot of new traders think that, oh man, if I see price in a bullish expanding triangle, then I need to. No, most of this is completely garbage. It's not that good. I'm going to be going over a few that I like, and I'm going to be going over the reason why I like them. And yeah, hopefully you guys can just learn a little bit more about chart patterns in a good way and not the extremely retail way. So the first one, this is from last video. Let's go to a new page. So the first chart pattern that I think is pretty decent is double tops and double bottoms. So a double top, right? Price is trading, comes up, rejects, comes into, let's say, a key level 100. Price rejects. Sellers now try to take price back down. However, right, bulls think that now they can just go and squeeze and bid past that rejection. So what happens? Bulls start to bid up the price, bam. Offer wall. Sellers come in, reject, push them down. Now, unless bulls can now defend this little support area and push price back up, which would then turn into a double bottom. But if they can't, and trade, boom, sellers get aggressive, bids and offers step below this price right here, and, we go on down, then boom, that would be a double top. And now, of course, vice versa, double bottom, sellers pushing price down, buyers get aggressive here, buyers keep bidding it up, sellers come in again, price comes back down, sellers try to break it below, maybe they do, then price just comes back down, or maybe buyers get aggressive again and bid up the price, squeezing shorts past this level and going on upwards. Now, again, so this is just for two of them, double tops, double bottoms. One of the things about chart patterns is that, so double bottom, right? What if it rejects again? Now it can come down here and it can either break below. So now this is, theoretically a double top, or rejects again, rejects here, now that's a double bottom, and it could break there, or could come back down again, and then, just whatever, die. And then, if you look at a chart pennant or pattern, I don't even know Yeah, bullish, triple, bot. Like, that's the thing, guys, about chart patterns, is it's not about the actual thing. It's just about the fact that if shorts get aggressive and they keep getting aggressive, why would you not short when bulls try to break it above and it's clear that they don't? Bulls get rejected on high volume and price starts getting pushed down. You probably want to enter over here. You probably want to enter there, because if bulls start stepping in right here and, you know, they start to push price back up a little bit, okay, I mean, your entry is up here. It's not, you know, it's not right here or some weird place. And the trickiest thing about chart patterns is knowing what kind of formation or pattern, or whatever you want to call it, is going to be taking place. Because again, something can look like a double top but then turn into a double bottom, or look like the next one we're going to get into, bull flags and bear flags, but it can look like a bull flag, right? Bull flag would be, oh, it goes up, you know, kind of takes a little break, and then it's supposed to go back up. But it could also turn into a double top if shorts get aggressive right here. If they don't, then that would be a bull flag. But if they do, then it's probably a double top, or it could then turn into a double. Guys, you see just how many different ways these chart patterns can exist. So first of all, I don't prefer entering off of chart patterns. I really don't. I think they're stupid. There's only, like, to me, the only ones that I really like is double bottoms and bear flags and something like a head and shoulder or a inverse head and shoulder. Okay, those are the only ones that I like. And the reason for that is because they're very clean, right? Like, to me, let's see if there's anything that is clear right here. Anything that is clear. Any chart patterns? Not necessarily. I think the closest one we might have would be Apple. So theoretically, with Apple, you can see that inverse head and shoulder that I just made, right? So price goes down, up. So that would be the shoulder. This would be the head, right? So it comes down shoulder, retraces a little bit. Sellers get aggressive, push. That's the head. Buyers bid it up. And then theoretically, you know, would come down a little bit like it is here. They'd be a little bit more, and then would break this 179.5 level and squeeze those shorts there. But the reason that happens is because price moved down 1.6% on the day, right? Because sellers stepped in, hammered down the price, and technically it's just accumulating down here. Once enough accumulation happens, once enough buyers are buying Apple stock down here and absorbing all of the selling pressure that's going on, then eventually it's just going to rocket and it's going to squeeze the shorts like the longs got trapped and squeezed on the way down. It's going to mirror over here, and they're going to do that on the way back up. Okay? That's why it actually happens. Okay? The reason why you look for a head and shoulders in this, or an inverse head and shoulders in this scenario, is because once this happens, well, price would have to come all the way down here and break this low, so that this would get invalidated, and then, you know, sellers would be the actual aggressive ones here. So again, it's not about the actual chart pattern. Okay, the whole basis of the market is supply and demand and to facilitate trade as an auction. Right? Do I hear 181, 181? Nope, nope, nope. 180.5, 180.5. Nope, 180, 180. Oh, finally got some interest at 178.5, 179. That's what happens. Now, there's some interest at 178.5, 179, 179.5. And boom, there you go. This is where the market feels comfortable, where price is currently trading at. Right? When it feels comfortable, people get in. Now it has to go and rally back up because eventually there's going to be just a lot of buying pressure and Apple is not going to just stay down forever. Right? There's a lot of shorts here that are still sitting in short that have to cover eventually to close their position. So when buyers buy, they're going to be in the negative and have to buy it back to close their position. So it's just going to mirror the same thing. So again, it's not about the actual chart patterns. It's never about the actual chart patterns. Right? But you can kind of see right here the bullish inverted head and shoulders. There you go. There you go. That's exactly what it was that we just saw in Apple, but it's not about the actual chart pattern. So that's for the bullish inverted head and shoulders, for the bearish head and shoulders. So this would be, or let me redraw this. Dun, 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 dun. And then this would be theoretically what we'd want to see happen. So what is this telling us? So, bulls push it up. Takes a little break. Some profit taking happens. Little retrace. This could also technically... Shit, that's not a good line. Let's try to draw this a little bit. My God. There we go. So, before this happened, right, this could have either retraced all the way or became a bull flag. And if you cover this up, if you could just cover this up with your hand, this would have technically been looked at as a bull flag. So, okay, cool, perfect, that's a bull flag. Same thing here, right? Now, oh, cool, the bull flag worked out. Awesome, awesome, price is bullish. Oh, but wait. Shorts and sellers are coming in now. Now, it's the same thing. Shorts and sellers are the same thing. They're not different. So, sellers come in now. Hammer the price back down. To the point of where bulls got interested again. This little demand area right here. Now, bulls could technically also push price back up here. What would this pattern be called? Nothing. It would be called there's more demand in the market than supply. Right? There's no, it doesn't matter what the chart pattern name is. Okay? And this is why you need to understand price action first and not just look at chart patterns and study the chart pattern, because literally you could find every single one of these chart patterns literally in the same pattern, right? You could take the longest ones, the head and shoulders, and find literally every single one of these in there. And it could all be in a range. Okay? So again, the reason why I'm going over this is it's just so you guys know that, chart patterns are not some magical thing. It's about trading is about risk management, psychology, mastering yourself, controlling your emotions. It's barely about this shit. It literally could not matter less. Okay, the reason that people fail is because they're not experienced enough in mastering themselves. They don't have enough discipline to not revenge trade, to journal, to do the hard stuff, to dedicate years to this. Okay? Now, back to the chart patterns. So yes, if you draw a line right here and freeze all of this stuff, if you freeze all of that stuff, what does this look like? Again, I literally don't know, because it's not about the actual chart pattern. Now, right, let's remove this little line. Now, let's say that this does happen and price comes all the way back down. That's because sellers stepped in here and they're defending this, because now this looks bearish once it comes back down. So they're defending now this resistance area or line. And now they hammer the price back down. And now if they can get the price back below this demand area or support line, whatever you want to call it, then yeah, that's where now this head and shoulders would play out. It would look bearish, etc., etc., etc. But if that doesn't happen, and price comes up, retest, breaks above, oh cool, bull flag, all shorts step in again, and now bulls literally just drive up the price. Maybe they get rejected up here, maybe they squeeze again. Guess what now this is called? An uptrend. Whoa, an uptrend. So you had to do all of this shit just for it to literally go up. Right? So you can either geek out about chart patterns or just realize that this is just the market and it's just going to facilitate trade and offer price as an auction. Right? So let me, is there any other ones? Oh, let me just go over bull flags and bear flags. So before I end this, bull flags, and I kind of went over it here, but bull flags, obviously just price comes up until whatever point bulls don't want to bid it up anymore. There's not enough demand. And then some profit taking happens, some short selling, aggressive shorts coming in takes place. So that comes down. And then, so it goes up, trades sideways, a little bit down. And then bulls get interested again to try to break this high, buying this as a discount right here, looking to sell right here or above. They do. Now they break this area and boom, price goes up. Or as a bear flag, price comes down. Bulls start buying, shorts start covering, whatever, vice versa. Price comes up a little bit and then shorts get aggressive again and hammer price back down below. So again, to recap, what are my favorite ones? The head and shoulders and the inverse head and shoulders, I like that. Double bottom, I like it. And I do like bearish, a bear flag more than the bull flags. To me, it just seems like bear flags always play out a little bit more than bull flags tend to. But again, guys, it's not about the actual pattern, because you can see patterns in anything, right? It's just about what is the market actually doing. So I hope you guys enjoyed this one. If you did, if you guys could just hit like, subscribe, and leave a comment, that'd be awesome. I appreciate you guys watching, and see you guys in the next video. Peace.